Okay, so that's them. Straight line is straightforward. 500 less the 20 is 480 divided by 4 years is 120 per annum. I don't know what I've written there. I've tried to write per annum and then it's come out very funny. It's like a 79. I'll just leave it as 120. Okay, then reducing balance. Reducing balance method is a funny thing to use when you have residual values, because you never will get back to that residual value after the 4 years if you're using reducing. It's more, I think, a method that you would use if you weren't sure what the residual value was, perhaps. Now I've rubbed out what I had written there, 5625. And I think okay, so that all you would do there is you would say 20 years is 25% per annum. Yeah, 25, 25, 25, 25, 4 years. 1 divided by 4 gives you 25%. So you would just say 480 times 25%, it would land on 120. You take 120 off, then it's 360 times 25%, and so on. And you would just reduce the balance and continuously times by 25%. Then in the sum of units, as I said, it's 4 over 10, then 3 over 10, then 2 over 10, then 1 over 10. And if you look at the numbers, they just multiply. That's 1 year, that's 2, that's 3, and then that's 4 years of depreciation. So that's the calculations of depreciation. I think I have one more thing that I wanted you to just have a look at, and it's to do with derecognition of assets. I don't think derecognition is something really that we need to go into in any great amount of detail with PPE, because you're selling PPE and you work out a profit or loss on sale. Do you agree? And that's something that you learn to do in first year, I think. But I wanted to just look at this example because of the fact that the payment is delayed. And I just want you to, it's the one that I could find that had a practice where there's a present value calc. So if we look at machine 1, these are 2 machines. One is sold and one is scrapped. So if we just look at them, machine 1 had an original cost of 300, a residual value of 0, and a carrying amount of 180 when it was sold. So this is the carrying amount when it was sold. It was sold for 210. So we would expect the profit to be 30, isn't it? Except that there's a problem in that the payment will only be received on the 30th of June, which is 6 months. A year later. So we have to do a PV calc to work out what the PV is, to work out the profit correctly, and then the interest is the difference. So that's what I want you to practice. We can just read through number 2 quickly. Number 2 was a machine also with an original cost of 500,000 and a carrying amount of 200,000, and it was withdrawn from use on the 30th of April after health inspectors prohibited the further use of the asset due to pollution problems. The asset cannot be adjusted to secure further use, which makes its resale impossible. So it's an asset that has causes too much pollution. So you can't sell it. Nobody will want it because they will then sit with the problem of an asset they can't use. You can't use it anymore, so it's going to be scrapped. So this one would just be a write-off, isn't it? But you must just be careful here with the dates. At 1 January 12, it has a carrying amount of 200. You're going to first depreciate it up to the end of April for 4 months, and then whatever balance is left, you'll derecognize, exactly like we did with that service. But just do that calc for me on your calculators. I hope you have them, financial calculators. Work out a PV for me on this payment. So the way it would work is future value is 210. I is 12%, there it is. Current interest rate for financing assets. Oh wait, we have to, I see that you'd have to depreciate, but just let's do the PV first. Future value of 210, N is 1, because we sold it 30 June 12, we'll receive the money 30 June 13. N is 1, I is 12, we calculate a PV. Give it to me, I see you've already got. Who's got? What? 187,500? Yeah? Okay, 187,500. Okay, I wonder if the solution is here, if it's on the other page. Oh, no, it's here. Okay, so there's the proceeds on disposal, 187,500. There's your calc, N is 1. I just want to point out to you that some of the calculators have a problem when you make N less than 1. I don't know, it starts to compound in months when you start to put in N as less than 1. So what you have to do is you have to make N1 and make your I less than 1 to make it work, isn't it? Some of you are nodding because you've seen it. We've talked about it before. But this was a straight 1, so it was fine. Future value 210, N1, I12. They always have to give you an I. Compute PV 187,500. It means that the difference between these two will be interest. When I receive the money, I will record interest income, isn't it? Because it's the money that I'm receiving of that difference, which is what, 22,500. Then on the machine, I had a carrying amount of 180 at the beginning. I'm going to depreciate it for 6 months because I only sold it in June. Yeah, so I'll end up with a value of 150. I sold it for 187,500, which is the present value. So my profit is 37,500. You'll see they split the interest received into 2 bits. I think it's because our year end is in the middle there. Is it? Do they say? They have a December year end. Yeah. So we're going to earn half the interest from this June to December, and then the other half from December to the next June. And so that's why they then halve the interest, and they show half of it, 11,250 in the current period, and then the other half will be in the next period. Okay. All right, assignment 1. Assignment 1, we're going to do just the cost bits. Although you'll see that assignment 1 especially, let's start with the machine. Okay, so here's a machine. We placed an order for a new electronic machine. We paid an installation fee and a delivery fee. It was installed. On acquisition, whatever. The machine needs a major inspection every 24 months. On acquisition date, the inspection was estimated to be 20,000. On the 1st of March, the CPU was infected by a virus, and then it required an inspection to be immediately performed. The remaining useful life and residual were unchanged. Here's some more additional information, but I think it doesn't have. Machinery is accounted for using the cost model. Yeah. The required for this assignment, next page, is the notes, a PPE note. So you'll be able to prepare that PPE note for machinery. Do you agree? It will look exactly like that example we did earlier. I'm sure it will have a derecognition, a new one, the whole lot. So that's what I want you to practice now. And then once you start with the machine, what we also can look at is this property. We purchased a property which is going to be used for administration purposes. So it's PPE. On acquisition, it was available for use. The expected life is 25 years, a residual value of 50,000 allocated to the building. So there we're going to split it between land and buildings. During the current financial year, the directors decided to apply reval. So for now, you can ignore this reval because I haven't taught you revals yet. Agreed? So for now, I just want you to do the cost piece of that asset, the calculation of the cost piece. Let me just go back here. When you do a calculation for the PPE, what I want to always see is I want to see the date it was bought, so 1 Jan 08, and I want you to put the cost of acquisition. In the machine's case, there were a number of costs. Just put them all down and come to a total. Yeah, maybe there's a number of costs that need to be added to get to a total. Then I need you to put the life here, and in months preferably, because then we deal with all the pieces of the years. Yeah. Then your next piece of the calculation is accumulated depreciation to get you to beginning of year. So you're going to work out what is beginning of year, and then you're going to work out how many months from when it was bought to get you to beginning of year. That you're going to do in one step. We're not going to do year on year on year on year because you don't need that information. You need to get to beginning of year. That's the beginning of your note, isn't it? So sometimes there are 3 years or 3.5 years or 4 years, whatever it is, between acquisition and beginning of year. You're going to do that in one step. And then you're going to have, for the current year, for the current year, you're going to have depreciation. Oh, sorry, that goes there. For the current year, you're going to have depreciation. You might have additions or disposals or derecognitions or new recognitions, and then you're going to land up on end of year. Yeah, that's your calc. For depreciation, then we expect this to be a 12, isn't it? 12 months. But it's not always. Sometimes it's not. And then whatever life you've got left at the end. So that calculation is what I need you to do for me for the property and also for the machine. Although machine, you're going to have 2 columns like we had earlier. All right. I'm going to leave it up on the board. I don't know if you've got it or not. As a handout, we're going to do the machine first. So there's the information for the machine. And as a starting point, what you can even do is go and set up that PPE note. Yeah. So the PPE note will look like the one that you had, but it will have 3 columns. It will have one for land, one for building, and one for machinery. Yeah. The note. And then once your note is set up, you can go back and do your calculations to put in. Okay, let's see how that goes. Everybody agree that's more or less what you've got? Yeah, I've done a walk around. I see almost everybody got that part. A couple of people, well, some made a mistake with the months. You always have to be careful with the months, isn't it? Making sure. They said to you that you bought the machine in June, but we only brought it into use. It was only ready for use in July. So 1 July to 31 March is July, all the way to March is 9 months. But for the inspection, it only went to 1 March, so it was only 8 months. And then we only had 1 more month left. So when we plug it into the note, so that's the calc. This is the note. When you do it, there was 1 year a student submitted the calc as his note. His note looked like that with the 2 columns, and then he didn't get any marks. You don't, because that's not the note. This is the note. So this is the note. The note, if I start with machinery at the top, starts with zeros, right? At beginning of year, which was 31 March or 1 April 2014, there was no machine. The machine was bought during the year. So then if I look at what was bought, it was the whole machine, 402.8. Do you agree? I bought an entire machine, which I split, but I bought the entire machine. Then I have depreciation. There's going to be 3 bits of depreciation. There's this depreciation, which is for the full 9 months. There's this depreciation, which is for the 8 months. And there's this depreciation for the other month. Yes? So we've got to add them all up. Did you add it up, Christian? But your numbers were this. You haven't added them up. Oh, there's my calculator. 5? 55, yeah. 517. There's depreciation. Then derecognition. I had to derecognize the remaining piece of the first inspection, isn't it? 13,333. Do you agree with those numbers, by the way? 13,333, derecognition. Okay? And then I capitalized the new inspection, 24. When you show it, I would put a little 1 there, and then I would put a little 1 and show what numbers make that up. Yeah? Because if you make a mistake with one of the numbers but the other 2 are correct, you can still get 2 out of the 3 marks, or however the mark allocations work. So then at the end, our balance is the 334.95 plus the 23. Can I do it in my head? I think I can. 357.95. Sorry, the derecognition is also a minus. Let's just double check that that works. And this is exactly the same as the example that we worked through in class, isn't it? I even showed you the note. 402.8 minus 55, 517 minus 13,333 plus the 24, 357.95. Okay, now the cost is going to be, I wonder if I can change the color. I can. Let's make it pink. Where's pink? There. The cost is going to be the original cost of the machine. I just changed it and it didn't change. Okay, sorry, let me just undo that because I don't want it to be the same color because I don't want I want it to be pink because I want you to be able to see what I'm doing. Full screen. Okay, so the cost is going to be, didn't I just change it to pink? I don't think so. Pink. Close. No? Was there a save? Pink, save. Now it should work. But now it's like it's a funny pink. Okay. All right, so now the new cost is that one plus this one. Do you agree? Because this piece, the first inspection, is gone. Yeah? So that's new cost. 382.8 plus 24, which gives me 406.8. Thank you. 406.8 in a box. And then accumulated depreciation is going to be the 47 and the 1, 48.85. And hopefully it balances because I'm just dealing with new. Let me just do this. Oh, no. So I'm going to do that. That's that number. Then I'm going to change it back to yellow. That was this number. And then I'm going to make it green. And this number here, I'm just going to go like that. Is also that, is that and that. Does it work? Yeah? Okay. So that's that note. Yeah? With an inspection and a component. It's not difficult? It's not difficult. The only thing is, this part is exactly what we practiced in class. This one we didn't practice. I showed you in that note. So you have to learn how to pull stuff from there into here. If you pull nothing, you get 0. There are no marks for calcs, isn't it? This is another area where if you look at the calculations in the study guide or in the solutions that UNISA provides, they're huge. And maybe this is a good time for me to talk to you about workings. If I had to show you a solution to a question, an exam question or an exam or a test from a residential university, somewhere like WITS, their solution has the required, whatever the required was. In this case, this is the required, the PPE note. And then the workings are minimal. They are as little as you can possibly get away with. Yeah? When you see UNISA solutions, you'll see the workings are like all perfect with huge, big headings and like lots of writing, isn't it? And very well set out. The problem with workings like that is that they take a lot of time to do. You practice doing these huge workings. If you look at the PPE workings, next week we'll look again. They're huge. You need to do your workings as quickly and as easily as possible to get it into the solution. The marks are here. The marks are not there. if your number here for depreciation is correct, you will get the 3 marks. If it's incorrect, they will look to see how you got it, and they won't go back. If it's worth 3 marks, it's 1, 2, 3. They're not going to go see how you calculated it or how many months you used. I walk around and I'll say, you made a mistake with the months. The examiner doesn't care how or what mistake you made. If it's wrong, finished, he moves on, isn't it? The UNISA solutions are so detailed because the UNISA students don't all have access to a lecturer explaining a solution to them. They have to figure it out themselves. So that's why the solutions are so detailed. Yeah? Your solutions, your workings do not have to be that detailed. They don't have to look like that. You do the minimum that you can do. Wherever possible, I saw Christian, but I think Christian is like taking 2 steps forward already. He started with that note, and the pieces that he could, he immediately put into that note. I saw his note, it already had the dashes, and the minute he had that 402, it was in the note. Do you know what I mean? So learn to earn your marks as quickly as you can. Not to sit and do perfect workings and then not be able to or not know how to push it through, because then you can get 0. Yeah, it needs to be right and be pushed through perfectly. This doesn't need to look perfect, but it needs to be right so that you can then push it through perfectly. All right, so that's the machine. Next week we're going to do reval, so then we'll be able to do that property. But I want you to go and do just this calc, like this, for that property. Yeah, and remember that I want you to use this format. Where's my format? It's here somewhere. Here. I want you to look at when was it bought, and that property was bought in 06. It's a long time ago, 06. The property was bought in 06. Beginning of year is March 14. So I need you to get from November 6 to March 14 in one go. This is for you. Because this is the number that you're going to put into your note, beginning of year, isn't it? These are the 3 numbers that are the start of your note. Carrying amount at beginning, cost, ACDEP. Those are the numbers in your note. So I need you to go from acquisition all the way through to beginning in one step, and then look at the movements for the current year. For our property, the only movements are going to be depreciation and a reval, which I'll teach you next week. Okay, then next week we're going to look at revals, and we're going to do deferred tax. You'll see that the required for the assignment is a PPE note. Let's just look at that required again quickly, because I want you to be aware of how important PPE is in the exam. It's a PPE note which is worth 30 marks. And that is what it will be in the exam, isn't it? Christian, 30 marks. Hey, PPE is big. A PPE note for 30 marks and a deferred tax note for 15. And then some journals. Journals for the investment property, for the shopping center, for 5 marks. But that is a typical exam question, that. The PPE for 30 and then the deferred tax. So we're going to work through the deferred tax next week when we do revals, because then I'll show it to you with the reval all in one. And so next week we will then be able to finish this assignment. No, we won't, because we won't be able to finish the investment property, but we'll be able to finish that piece. Okay. All right, I'll see you guys next week then.